Back live with the end of day PulseWave report for Monday, October the 17th, 2022. Hopefully, everyone had a wonderful weekend and are ready to get back into these markets. So let's jump right into it. Starting off with our Euro Yen chart, which is a proxy for our US stock market. As you can see, the market did catch quite a bid today. Nice rally, new 52-week high. And it looks like it wants to drag the U.S. stock market along with it. We have increasing buying coming into the market now, whether that's the PPT or that's actual shorts liquidating, getting squeezed, or new longs piling on, or a combination of all three. We have upward thrust. Looking at the NASDAQ 100. And as you can see here, the chart doesn't lie, right? So we had a gap up, right? But it's still inside of the bar from Friday. And we did not pulse wave today, even though the market finished up higher than it did on Friday. It's still a gap, and we still did not clear Friday's high, ladies and gentlemen. So we came into today with a rally alert, and instead we got a narrow range inside day, which sets up things for tomorrow. Now, the bulls have the advantage going into tomorrow, but we're in a bear market, and it is possible that we could get a reversal that cancels out the rally alert, and we could actually crash pretty hard tomorrow and even put in a new 52-week low. So be prepared for anything moving forward. All right. This is turnaround Tuesday coming upon us. We did not continue to rally and fill this gap. Now, can the market do it tomorrow? Of course it can, but we're getting near a resistance point here, and I don't know how much further the market can push. We're still neutral as far as the momentum goes. Bulls have the advantage, but as of today's activity, the only thing I can say for sure, for certain, is that it would appear that the bears are staking their claim too. So very interesting what's going on here. Hey, what up, Brandy? And what up, Quando, in the live chat? All right, so let's see here. Now, the metals got a little bit of a lift today as well. Here's silver. This is SLV. And as you can see, the market did gap and then back and filled and then set itself up for a rally alert for tomorrow. Now, here's the issue that I have with silver. Silver is right here at the bottom of the Kumo cloud. All right. And not too far away from the top of the Kumo cloud. Now, typically, this invalidates each other, meaning that price action can just shoot right through that like a hot knife through butter and do the same thing on the downside. So it's possible, even though we have this rally alert, that we may not get any upside production because this is a key resistance zone. So it's going to take a lot of buying. I mean, people will have to come in and think that, you have to buy silver for right now for whatever reason in order to get enough momentum to get us, back above the Kumo cloud. And that's saying a lot because this is a bear market that just won't quit. So the bulls got a slight advantage going into tomorrow, but it's going to take a lot to turn the tide here. Looking at the S&P 500 by way of the SPY, the spider. All right, so we had a rally alert coming in today as well, right? And same thing with the NASDAQ. You didn't have any upside production today. Now we are looking for a rally alert tomorrow. And you do have the bulls with the advantage going into tomorrow's trading. But again, you're at a resistance point and you have a bear market. So this is going to take some doing. if the euro yen is really going to act as a proxy again, it's giving some light at the end of the tunnel, saying that it's leading the way and that the U.S. equity markets are right behind it. But they're not as strong as the euro yen right now. They're still down here near these 52-week lows, and it's acting as a magnet to pull prices back down or keep them muted. So it looked like it was an impressive rally today, but was it really? And we do have a bearish pointer today too, ladies and gentlemen, on the S&P 500. All right. This is the truth. See, when you just look at quotes on a screen, if you watch, the business channels and stuff, you would think, oh, what an impressive rally today. Oh, the rally was off their chain. Oh, the bulls are back. But then you look at the algo chart here, and you don't really see anything to write home about. Not at all. All you had was a lot of short covering from a new 52-week low. That was it. Bears taking profit, locking in gains. And then you had a cascading effect, and more people started liquidating. But according to this here, was it really buying? I'm going to say no. I think it was shorts being squoze and taking profit, fearing that they would lose a lot of their gains. Those that didn't get out down here had another opportunity to get out near the close on Friday, talking about shorts. And those that didn't got caught here. So we got a bearish pointer. You know what that means. You don't need me to tell you. You know what that means. I'm just saying. The bearish pointers, they tell the story. I'm concerned about the U.S. stock market right now. I'm concerned. What about the bond market? The bond market doesn't exist. I shouldn't even talk about it anymore. The bond market does not exist. All right. The global bond market doesn't exist. Forget just the U.S. bond market. Bonds, period, have disappeared. They no longer exist. All right. They don't exist. All right. The central banks have destroyed the bond market. All of the intervention activities and market manipulation has destroyed the bond market. Back to back 52-week lows. Just constant. New low, new leg lower, the bond market cannot rally. No one is buying these bonds. You are locked in on this bear market with increasing momentum, increasing downside momentum. There's no bids in the market. When you see this, there's no bids in the market. Here's all your bids up here, and they're saying, no, not interested. Just nothing but selling. Selling begetting more selling. No one is buying. No one. No one. And this thing is just falling apart. Falling to pieces. All right. What about the dollar? Well, let's start with the UUP first. And as you can see, just like I warned you last night, what did I say? I told you about this dollar, man. Look at it. Everybody thought, oh, the dollar's about to lock back in and just rip and roar. Really? See, I warned about this algo shift. Thanks, Thomas, for reminding me. Yes, I did. A few days ago, I warned in the trading room that a major algo shift was underway. And I talked about it in the last video as well. And here you are. All right. It is what it is. Okay. Top of the Kumo cloud is in play. All right. Now, I'm not saying that the market can't relock back in, but you got a crash alert for tonight into tomorrow's trading. That's a bona fide crash alert. Can the Fed come in here and prop the market up? Probably, if they wanted to. But it's not likely. This is saying that something is wrong. You had a crash alert here on September the 28th. You had another crash alert here on September the 30th, my birthday. And then now you got another one for today. The dollar is looking weak. Now, if you go to, excuse me, take a look at Litecoin, and you see that Litecoin has a rally alert for tonight into tomorrow's trading. Now, we came into today with a rally alert, and we got upside production. Bottom of the Kumo cloud around the $55-ish level is the upside target for your Litecoin. All right, next up, we got Theta. And you can see here that Theta also has a rally alert for tonight into tomorrow's trading. $1.25, bottom of the Kumo cloud, is the upside initial target for this one. And it also came into today with the rally alert, and we got some upside production, which is nice. It's nice to see upside production. Here's your ADA Cardano, and it came into today with the rally alert too. And we got a little bit of upside production. Bottom of the Kumo cloud of 50 cents will be the upside target on that one. And then last but not least is your XRP Ripple. And you can see here, this one came into today with the rally alert as well, but unlike its counterparts, it is struggling to give us upside production. And it's a battle right now against the bulls and the bears as we are flatlining and consolidating up here. Consolidation bar consists of September the 22nd, coupled by September the 29th. As you can tell, price action is staying within these zones. All right, let's see here. Oh, thank you. Thank you. Yes, September 30th. That was my B-Day. Sure was. All right. Yep, that would be correct as well. All right, let's see what else we got here. Okay, let's look at the actual dollar index so we can look at price points. Okay, so here we go. So basically what you are seeing before you is the US dollar index, right? It's the cash index. And it's looking just like the UUP as it should, right? Because the UUP is a derivative of the US dollar index, which is the most complicated derivative product on the planet. No one can even tell you what it contains, what it consists of. Is just the dollar, the petrodollar. All right, so the top of the Kumo cloud here, we'll call it 109. Okay, so 109. If 109 does not hold, which is the top of the Kumo cloud, then this thing will drop like a hot knife through butter and go into free fall. Now, they've been successful in getting the dollar this high, and it hasn't been above par in a long time. Par was a really big problem for the US dollar, okay? If you recall what I was saying about the US dollar. For those that have not followed me for years, for the decade plus that I've been on YouTube, let me explain to you the current levels with the dollar. All right. It doesn't matter how high the dollar goes. These truths that I'm about to share with you never change. All right. And that first truth is that a strong dollar policy coming out of the White House needs the dollar above 90. All right. And they really would like to always see the dollar above par. But for the most part, the dollar's been trading below par for years. So 90 plus is a good, strong dollar policy. Once the dollar drops below 90, all right, there's a threshold between 90 and 88. All right, I didn't make this up. This is just a fact of this market. 88 is the first red alert warning sign that the dollar is too weak and they need to defend it and get it back up above that 90 if they're going to maintain a strong dollar policy. The red alert signal for the US dollar is a drop below 88. And there's a threshold at 88 that goes all the way down to 77. It is considered a red alert if the dollar drops below 77. Now, historically, it has dropped below it before, and it didn't stay down there so long because they had to do something about it. That is a crisis, all right, like what the Japanese yen is having and has been having lately. They can't allow it to get below that threshold. That 77 is a red alert. We're talking, tanks, bullets, guns, the whole nine. Recessions, depressions, stagnation, all that stuff, right? So that's why they've been pushing the dollar and getting it so far above par that they could give themselves a little bit of breathing room. So you've seen the ebb and flow up at these price levels, right? Just like any other normal market, a strong bull market will have these ebbs and flows. You have your rally, and then you have your little pullback, and then you relock back in and rally, a little pullback and rally. But this time you have something different up here happening. This isn't just a pullback. This is saying that the top is in. You have topped out in the market, okay? That's what this is saying. It's saying no mas, no more. We're done. We're running out of steam. We just don't have it in us right now. And I want to go home. This is Forrest Gump, all right, running that marathon cross country and then deciding now, okay, I'm tired. I don't want to run anymore. I want to go home. So he stops running, and you know how the story goes. He turns around and starts walking back home. Okay, not running home, but walking home. All right. So that's what this is, your dollar. We got to watch this dollar now because it's important. You got to watch this dollar. You don't want it to end up like the euro and dropping below par. The euro has not been below par since 1999. All right. It's a fact. I remember the day that they switched over the Deutschmark to the euro. The euro made its presentation at 88. All right, 88. Stood there for a little bit, and then before you knew it, it was above par, and it never looked back. Once the euro broke par for the first time on record, it never looked back. We have not seen a euro under par since 1999 and early 2000. Facts. All right. This is not a good sign. This is scary. The euro below par is equivalent to the US dollar below 77. This is red alert. This is red flags. We have a problem. We have a financial problem, a financial catastrophe, calamity. All right. Calamity Gannon. All right. For my Link heads out there, my Zelda fans out there, this is Calamity Gannon. Okay. What are you going to do with Calamity Gannon? All right. You're Link and you have a wooden sword and it's about to break. What are you going to do? Your sword is on its last leg and so is your shield. And you don't even have the appropriate magical armor on. You're basically outside naked trying to fight Calamity Gannon. And you only have like half of a heart of life left. One more hit and that's it. You ain't getting up. All right, this is where we are. I had to stress that point. Okay, now here is the Dow. Now the Dow is a better chart to express the overall consolidation of the U.S. stock market. When you look at the algo chart of the Dow Jones by way of ticker DIA or the diamonds, you'll see this pattern. This is a consolidated zone where you have a 52-week low. The market panics and bounces from that. All right. You have all your short sellers taking profit, high-fiving each other and saying, let me get out of Dodge, let me get out the way and take some money off the table. And then you have the latecomers coming in saying, well, I missed selling up here, so I'm going to go ahead and start selling now. I'm going to use the rally to sell. And then they come down here and then they're like, yay, now we made some money too. And then they got bum rushed on this bar here on October the 13th. And they panicked and they liquidated. And that had the market to hang up here at these highs. Now, you look at the Dow today. At one point, well, the Dow was up like 500-600 points, whatever. It made it look like the Dow was just, oh, it's on fire. No, it's not on fire. All you did was gap up from the crash into the close on Friday. Now, that gave us a rally alert coming into today. What did we see happen? Narrow range inside day. But you wouldn't know it by looking at the actual quotes on your dashboard, because it would have said something like the diamonds are up $8, or the SPY is up $8 or $6, and you're like, "Ooh, that's incredible." It's not incredible. You're just consolidating. When you have very wide trading ranges and the market is running up and down the range, it makes it seem like you're having these explosive money days, and you're really not. You're just going up and down this range. And this consolidation bar, when we had the rally, is what is going to express the price point action for the near future. Prices are going to remain in this zone more than likely. Now, is it possible that this narrow range inside day springboards itself into a rally for tomorrow, and then we gun for the bottom of the Kumo cloud? Yes, that is a possibility, but because we are in a bear market, it's probably not likely. At some point, I believe this market is going to head back down again. Now, turnaround Tuesday is upon us, and we have to go into this sober-minded. Turnaround Tuesday is real. Whether we want to believe it or like it or not, Turnaround Tuesday is real. All right. So just prepare yourself if that happens. All right. Don't fight the tape. If the market wants to rally tomorrow, let it rally. Don't fight the tape. You will have your chance. You will not miss the next downturn, the next leg down. You won't miss it. And when it comes, though, I want to set this stage for you, set your expectation. The next leg down is going to be devastating, because look how long we've moved and consolidated sideways. Look how long. The longer you move like this, when that next leg down comes, it's going to equal twice the distance of your range. So far, we're a couple of weeks in now. We're 2 weeks in, going on 3. The longer this sideways action comes, that next leg could be absolutely monstrous to the downside. All right. I'm just saying. Now, if I'm wrong and we get a nice little Santa Claus rally into the end of the year, that's great. But just remember the prophecy for January of 2023, and that is bedlam. Just all out market anarchy. All right, catastrophe. It's just what it is. There's so much going on in the world right now. So trade what the market gives you, but just be sober-minded about it. You're in a bear market. Bulls are having their little field day right now, keeping the market elevated up here, but it doesn't mean they'll be able to hold on too long. So just remember, the last time this happened, we had a bear market rally, and it was pretty decent. It was back here. It started on June the 21st and ended on August the 17th. All right. Barely 2 months of this rally. Barely 2 months. But when that market fell down, it fell hard. You see, that leg down is brutal. That's all I'm saying. So this next leg down should be twice the distance of this leg. I know. I don't want to be the bearer of bad news, but I got to tell you the truth. All right. If the supports don't hold, this ×2 is coming to the downside. That could put the diamonds, which is at $300 today, below $100 tomorrow. All right. Twice the drop. All right. That's below $100. I'm sorry. I just have to tell you guys the truth. I'm preparing you. You got to be prepared mentally for the potential of what is to potentially come. Russell, my hustle. Look at this one. Now, I'm sorry. This is gold. We'll do Russell after this one. Looking at gold. We have a rally alert now for tomorrow's trading. But this is also a little problematic, because we had our rally alert here, and we got a little run, and then the market has pulled all the way back, and it's trying to build a base for support here. That's why we have the rally alert, because bulls are trying to defend this price level. They see this as a pullback, and they know the market wants to gun toward the bottom of the Kumo cloud around $160 a share. If that can be met, there's a strong possibility that you could catch a bid at the 160 range on GLD, and that the computers and robots will pick that up and see that as a breakout and push prices above the Kumo cloud and then back up above the 175 resistance mark. So gold is looking and like it has the potential to really explode if it can get back to that $160 mark. All right. And it has the first hit, first target, bottom of Kumo cloud 160, and then the top of the cloud at 165. If we can clear that, if price action can clear that, GLD should literally explode. All right. I mean, just explode. However, if the market fails here at the bottom of the Kumo cloud, if it fails, see how we got up here last time, and then the market failed to hold the price level. It got up here and couldn't penetrate. If this happens again under the auspices of a lower high, so we come back up, but fail to take out the previous high resistance mark here, and failure to get back into the cloud, or at least touch the the bottom of the Kumo cloud, then what will happen is the computers will see this as a failure rally. They'll turn themselves back on and start selling like we did here. See this diamond here? This diamond is where computer algorithms and artificial intelligence software turn on and push prices down. It happened again back here too on August the 26th, and it happened here on September the 13th. Machine learning is a real thing too when it comes to these markets. Back here, it happened again on August the 5th. Every time the machines turn on, that's what these diamonds represent, we get a huge leg down. The diamond turned on here for the bulls. All right. The programs turned on here on this day on October the 12th. But something happened. Not enough of them turned on, I guess, to move the market. And so this right here is a failure so far. This was a failure. You don't really get many of these. Usually when these machines turn on, they push the price. So what I'm saying is, because this turned on and you're only 3 days in, we just got another rally alert tonight for tomorrow. So it's possible that not all of them turned on and caught this, and now the latecomers are catching it now. So the indicators can lead the market 3 to 5 days out. So you still got a chance that other people will see that the machines have turned on and they'll come in. And this means that the JP Morgans and Goldman Sachs's are liquidating shorts. All right. And when that happens, it opens the floodgate for not only other shorts to take profit, but for bulls to pile on and ride that wave. And then sometimes you get these enormous $100 days in gold, where gold will move $100 in a day. And we've seen several of those in the past 10 years where we have $100 days in gold. So that is the prospect that we're looking at because of the machines. All right. So very interesting setups that are happening right now. Now to the Russell My Hustle. Now the Russell here, as you can see, is also consolidated. All right. Now, if you're just looking at your quotrons, oh, wow, the Russell's up, 50 points. Wow, the market's on fire. No, it's not on fire. The market is still below the Kumo cloud. The market is still in a bear market. You got prices and indicators all below the Kumo cloud. That is bearish. All right. Below Kumo cloud, bearish. Above Kumo cloud, bullish. This means nothing. This is just noise and markets trading at the low end of the range and then going and trading at the high end of the range and then failing at either point, coming back to the mean. And that's all you have happening. But you got a rally alert for tomorrow. So perhaps the market will try to get something up and going. Do not try to second guess or overthink it. Just go with the market. Go with the reports on your dashboard, and you should be fine. Last but not least, oil. Got to look at OIH. OIH was up like $6-7 today too, but you couldn't tell it by looking at the algo charts. You're seeing consolidation. There's no rally alert on your oil, even though it was up today. But that's only because it closed at the lows of the session on Friday. It closed at 239, and here you are at 246. So yeah, you're saying, okay, the market rallied $6-7, man. Well, that's nice. Ooh, yeah, that's explosive. No, it's not. You got an orange bar here. Do you know what that means? It means you came into today with a crash alert. You got no downside production, but you set up a narrow range inside day, looking for the possibility of falling overnight. I know. Hard to look at, hard to take, hard to swallow. That's why I like the reports. Because when you look at the algo chart, it shows you and reveals certain things, but the reports tell you specifically how to handle what you're seeing here. So don't even worry about it. I got you. Just follow the reports and you'll be good to go. All right. I saw a couple of requests, so I got a moment. I'll go ahead and put some in for you and see what we got. All right. So the first request is back here. Let's see if I can find you. There you go. Okay. All right. So the first one is BBLN. Let's see what we got. BBLN. All right, Babylon Holdings. Okay. All right, let's see what we got on this one. This must be a new one because we're not getting that much data. So I may not meet the requirement for the system yet. All right, so this one gave you a nice rally today, and you have a rally alert now for tomorrow's trading. Keep in mind you're in the bear market. Keep in mind you're below the Kumo cloud. But given what we're seeing here, it looks like the bottom of the Kumo cloud around the 75-cent-ish level is the upside target on this particular move if the rally is going to continue. And it looks like it may, because you do have a rally alert here, but you're also coming out of a very long, elongated period of consolidation. So just keep that in mind as well. All right, next up, you wanted to look at AVCT. Let's see what we got. AVCT. All right, this is American Virtual Cloud Technologies. Okay, so we're looking at the blockchain type stuff here. All right, so this tech stock had a flip-flop. You had a crash alert, then today it reverses that and gives you a rally alert. So these two are kind of canceling out each other. It's hard to say where this one's going to go. You are in a bear market, and I would go ahead and say that your upside target, your initial target, is between $4.50 and $5 on the rally. All right, so that's what you're looking at on that one. All right, and then the last one you want to look at is VEV. Okay, let's see what we got here. VEV. All right, this is the Vicinity Motor. All right, let's see what we got here. All right, so on this one, all right, so you had a gap up today, and you made a bearish pointer at that, and you already hit bottom of Kumo cloud target. So you had a rally alert that started on October the 11th, and then you got this nice upside production. So you've already met the initial target on this one. The secondary target is the top of the Kumo cloud at around $1.40. So if the market can make it, that's the next target. If not, you're going to at least back and fill this gap here and possibly take out this bearish pointer to the downside. So I would be careful there. If you got long here at these levels, go ahead and see if you can lock in some profit before the market pulls back, because it may not survive the pullback test. It may pull back and keep right on falling. So just take that, into consideration. All right, and then the next one here is uranium. All right, UEC. Let's see what we got. UEC. All right. Let's see what the market gives us on this one. All right, so this one has a rally alert for tomorrow as well. You had a flip-flop on this one, and the market is already in the Kumo cloud here. So it's trying to decide if it's going to break out of this long period of consolidation. Just not a whole lot happening at this time. What I would do is I would advise you to definitely follow the reports on this one, and then place your stops accordingly, and just wait for the market to decide what it wants to do. And then hopefully it will take you with it. All right, last but not least, you got REK. Let's see what this one is. REK. All right, this is the ProShare Short Real Estate. All right, the inverse ETF for real estate. Let's see what we got here. Oh boy. Okay, so you came into today with a crash alert. You didn't get any initial downside production, but you got another crash alert for tomorrow. Top of the Kumo cloud around the $18.50 mark is the initial downside target. So it doesn't look like this one is ready to relock in and rally again. But the initial blast off was back here on September the 13th. If you were lucky to catch all of that, then this is where you would be liquidating your longs and taking profit, and then standing aside and waiting for the next buy-in. All right, so there you go, ladies and gentlemen. All right, we've got one more. IMVT. All right, this will be our last one. IMVT. Let's see, IMVT. All right, this is Immunovant. Let's see what we got here. All right. All right, so this one is a long-term consolidation. Looking like the US dollar chart, to be honest with you. The bears are keeping this one from rallying, so they have the upper hand right now. But it's a possibility that this one locks back in on the downside, unless the bulls can come here and snatch the control away from the bears. Because you had this crash alert, you got some initial downside, then you're consolidating up here. Yeah, and the market's just like hanging out. You had your initial rally alert back here on September the 27th, gave you nice upside production. This is where longs will be liquidating, taking profit off the table and waiting for the next buy signal. But right now, this one seems like it's getting ready to fall down. Around the $5.50 mark is the initial downside target on this one. All right, so you guys, you got your marching orders. The PulseWave reports are out, so handle with care. And don't forget to smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And also, remember at PulseWave Trading, we got that 14-day challenge for you, free of charge. You can sign up, receive these powerful reports, and let's see how much money you can make trading with us over the next 14 days following these reports. I think you will surprise yourself at just how easy and effective it is. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.